Hello, I'm Susannah Streeter. Now let's take a look at how the markets in Europe have ended the trading session. And although on the bond markets there's been quite a sell-off, the equity markets have remained in positive territory despite losing some of this morning's gains during later trading. Traders seem largely to be shrugging off concerns over the Trump presidency and some weaker Chinese industrial production and retail sales data. The FTSE 100, Britain's blue chip index, ended the day higher at 0.41%, as you can see in the board. The DAX in Frankfurt, the CAC 40 in Paris, also in positive territory. Well, let's take a look at some of the market movers in a bit more detail now. And we've had a trading statement out from Taylor Wimpey today. The house builder said the housing market had been robust since the Brexit vote, despite seeing a rise in cancellations and a slight fall in sales. Its share price has risen today, but it's still around 22% below its pre-Brexit vote level. The oil price is edging close to 3-month lows, with the barrel of Brent crude around $43.7. One of the main triggers is the continuing strength in the dollar, but also concerns about oversupply continues to dog the market. And a wave of selling sweeping across bond markets continued today as investors assess the impact of a Donald Trump presidency. US and European bond prices have sunk in expectation he will put in place inflationary policies that speed the pace of interest rate rises. British 10-year government bond yields have risen to their highest level since the end of May. Well, for more on this, we can get some detailed analysis with Richard Dunbar, who's the investment director at Aberdeen Asset Management. Hello there. First of all, let's talk about these inflationary policies that Donald Trump is expected to bring in. And this is really a huge boost to infrastructure spending, isn't it? That's what seems to have triggered this sell-off in the bond market.
Well, there are various factors, and the biggest fear that bond market investors have is inflation. So Donald Trump's policies are outlining a boost to infrastructure spend, as you touch upon, possibly tax cuts around that, which again would boost growth, but also probably boost inflation. And what he's outlined in terms of protectionism, putting tariffs on imported goods, is also likely to be fairly significantly inflationary. So those three factors are leading to worries in the bond market and worries on inflation, allied with a general uncertainty around the broader import and impact of a Trump presidency, which is leading investors to require a little more return on US assets until we get a little more certainty and a little more clarity as to what a Trump presidency actually means and what it looks like.
Let's turn to the oil market now, because the price of a barrel of Brent crude has fallen again today. Why? Is it to do with the strength of the dollar, but how much is there oversupply in the world market as well?
Well, it's a bit of everything. It's strengthened the dollar, which wasn't expected by many, it'd be fair to say, when the Trump presidency was announced. But also we're seeing a greater than expected supply from both the US and from Iran. So the demand-supply picture is not as good as we thought it was. The dollar is a lot stronger than we thought it was going to be, and that combination is leading to a weaker oil price, allied with the general uncertainty around US domestic and international policy.
And also, moving to construction, Taylor Wimpey, investors seem cheered by its trading statement today, but it's still a great deal lower, the share price, compared to the pre-Brexit period, isn't it?
Well, investors were nervous post the Brexit vote that the uncertainty amongst the general population in the UK about what Brexit actually meant and what it would look like would lead to reticence in the housing market. And we have it today, another example of a company saying that we haven't really seen that. Backward looking, the half year looks pretty good for Taylor Wimpey, and as importantly, their expectations for the year ahead also look pretty good. So a very solid set of results, and today we're seeing some clawing back of the losses that we saw in June.
And also a slight uptick in the commercial property market as well. Some numbers out today. What did they show?
Well, the commercial property market's interesting. It weakened following the Brexit vote, principally on the back of concerns on the valuation of big buildings in the City of London and the worries that some of that business would transfer to Europe or indeed New York. We haven't seen much evidence of that, and that market is in effect balancing strong tenants with good income prospects paying rent against the yield available elsewhere in the market. So that market has steadied off and is being seen as a reasonably positive one.
OK, Richard Dunbar from Aberdeen Asset Management, many thanks. So really, the equity markets have ended in positive territory in Europe, but that sell-off in the bond markets continues. That's all from me for now, but there's a roundup of all the other top business stories on our website, bbc.co.uk/business. Back to you, Emily.
Susannah, thanks very much. And we're going